Today, almost every country in the world carries a debt burden. The United States national debt has now surpassed $38 trillion, a level unprecedented in its history. The European Union's total debt stands at around $14 trillion, while Japan's debt hovers near $9 trillion. From oil powerhouse Saudi Arabia to export giants like Germany and China, nearly every economy struggles with massive debt. Yet the real paradox is this: if everyone owes money, who is the creditor? I am a financial historian. I study the intersection of money, power, and history, and I can tell you, nothing is ever as it seems. Debt is more than a burden. It is the core mechanism keeping modern civilization alive. Behind every war, every crisis, every boom and bust, there lies an invisible ledger of debt and credit. If you trace this chain far enough, you encounter a disturbing truth. The world, ultimately, owes not to anyone, but to itself. However, this doesn't mean everyone shares equally in its rewards. Today, global debt has surpassed $315 trillion, nearly 3 times the size of the world economy. How did we get here? The answer goes back long before credit cards or digital wallets, to the very birth of debt itself. In 1694, England was at war with France. Its gold reserves were nearly exhausted. The king turned to the merchant class for help. In return for a perpetual interest payment secured by future taxes, merchants agreed to fund the crown. To administer this, the Bank of England was established. This was a turning point. The government could now spend money it didn't yet have. Investors gained something priceless: a promise from the state, and that promise could be bought, sold, and traded. This was the birth of the government bond, the seed of modern finance. France adopted the model, the Netherlands refined it, the newly formed United States used it to finance its revolution and expand westward. Debt became not a mark of failure, but a badge of credibility. Nations capable of borrowing became the ones capable of ruling. Where empires once conquered land to hoard gold, they now issued bonds to collect interest. The battlefield moved onto the balance sheet. Fast forward 3 centuries. Debt has become the world's largest export. The U.S. owes $38 trillion. Japan owes over $9 trillion. And every 100 days, the world adds another $1 trillion in debt. Every country is indebted. Every financial institution lends, and every citizen, through taxes, savings, and pension funds, is both a debtor and a creditor. Who is the real creditor? Let's start with the U.S., because its debt is not just national, it's global. Roughly half of the U.S. debt, $19 trillion, is publicly held, owed to investors rather than government agencies. 2/3 of these investors are American: commercial banks, investment funds, insurance companies, even the Federal Reserve. The remaining third, about $9 trillion, is held by foreign investors. The largest holder is Japan, with around $1 trillion, followed by China with roughly $800 billion, then the UK, Luxembourg, and Belgium. So when someone says America owes China, it's true, but only for a small fraction. Most of America's debt is owed to itself. The Treasury issues bonds. Domestic banks and funds buy them. The Fed buys some back, creating new money. Citizens pay taxes that cover interest, and those funds return to pensions and markets. The debt is real, but the creditor is the system itself. And this cycle isn't unique to the U.S. Japan lends to the U.S. The U.S. lends to Europe through the IMF. Europe lends to developing nations via the World Bank. Those nations invest reserves back into Western bonds, effectively lending to rich countries again. It's a global "you owe me, I owe you" chain. Everyone holds someone else's promise. Every commitment is backed by another. It's like a poker table where each player plays with borrowed chips, and the only rule: no one leaves. But there's a fourth layer, the most powerful: financial markets. Behind every government bond are institutions controlling trillions, hedge funds, pension funds, central banks. They decide which countries borrow cheaply and which struggle. The moment they lose confidence, currencies collapse. Governments fall, economies are reshaped. Democracy decides who governs. Markets decide who survives. At the top sit the high priests of modern finance, central banks. They don't just manage debt, they create it. When the Fed, or ECB, buys government bonds, it creates new money. A liability on one balance sheet becomes an asset on another. Every dollar in circulation represents debt somewhere. There is no money without debt. Every coin, note, or digital dollar carries an invisible IOU. This cycle endures because of trust. As long as investors believe governments will pay interest, the system works. But what happens when trust falters? In 2010, Greece could not pay its debts. Bondholders panicked. Interest rates soared. The European Central Bank and IMF intervened. But the bailout came with taxes, spending cuts, and unemployment. In Argentina, repeated defaults turned debt into a national curse. In Sri Lanka, fuel shortages and political collapse followed. When the system breaks, the real creditors become visible. IMF, rating agencies, anonymous bondholders. And yet the cycle restarts. New debts replace old ones. The system resets itself. In the 21st century, debt is not meant to be fully repaid. Governments roll it over continuously. This is policy, not conspiracy. When you borrow, you repay principal. States treat debt like a subscription service. New bonds pay off old ones. Economists call this a rollover. The real product is interest, the rent of stability. The global economy runs on that rent. Like a shark that must keep swimming, the system depends on trust that debts will be paid tomorrow. The U.S. will never fully pay its $38 trillion. Japan has rolled over debt for decades, over 250% of GDP, yet rates stay near zero, because government debt is the safest collateral. A U.S. Treasury bond isn't a liability, it's an asset. If governments repaid debt, the system would collapse. The money supply would shrink, deflation would strike, economies would freeze. That's why governments keep borrowing. It's a conscious rhythm, the heartbeat of capitalism. When a politician says, "we'll pay off the debt," it's an illusion. The goal is not elimination, but sustainability. The real secret: sovereign debt was never meant to be fully repaid. The plan is to keep the world believing it will be. Trust is uneven. Interest payments flow from taxpayers and workers to bondholders. Debt is a tool of wealth transfer, both globally and socially. As global debt rises, inequality tends to rise. Creditors aren't villains. Debtors aren't just victims. They're two gears of the same machine. The question is, what happens when fuel runs out? When new debt cannot cover old promises? Then, who is the creditor stops being abstract. It becomes personal. At the top of this pyramid, no single face is to blame. Not China, not Wall Street, not the IMF. We all are part of it. Debt has become money itself. Governments borrow. Banks multiply it. Investors trade it. Citizens live within it. The line between debtor and creditor is nearly gone. Once debt meant servitude. Today it means balance. But if the balance breaks, if trust collapses, only one truth remains. Debt is a promise that cannot last forever. If this gave you a new perspective, consider subscribing. Some answers are not in the future, they are hidden in history, and I can show you where to look.